Thanks for joining me on this presentation, evaluating the profitability of triple moving average strategy under different market regimes was the subject or topic under consideration in this research. The main goal of this project was determining when to profitably use triple simple moving average and triple exponential moving average trading strategies under S&P 500 stock market regimes. The goal was accomplished because market conditions which further positive yields for each of these strategies were discovered. In order to extend on the work in this paper titled Simple and Exponential Moving Average Trading Rules, Further Evidence Under Diverse Market Conditions, and the works in the paper titled Triple Simple Moving Average Control Chart, the researcher decided to compare the performance of triple simple moving average and triple exponential moving average, so as to determine when to profitably use these strategies. To put more clarity, in the first research paper, the researchers looked at the profitability of using simple moving average and exponential moving average trading rules and to see how they can make money with them. When I talk of a trading rule, I mean buying a stock when the price closes above the moving average under consideration and selling the stock when the price closes below the moving average under consideration. And with this kind of operation, they discovered that the exponential moving average generates some profits in a situation when the prices are moving exponentially. However, the other moving average under consideration does not yield enough profitability. And this almost fraud. It is better to just buy and hold. And these experiments were carried out on the Malaysian exchange during 2003-2015, and they discovered it's actually better to just buy and hold than waiting to time for the prices to move exponentially. In the second paper, the researcher discovered that combining the exponential moving average to form the triple exponential moving average could yield or come into a tool which can be used to prevent moving on to trends which have not really reversed, hence saving you from losing money. In this project, I assume that it is not practical to produce desirable profits throughout all market regimes with either the triple simple moving average or the triple exponential moving average trading strategy. And this assumption was proved to be true, but not false. In this project, Python was chosen as a programming language because it had already tools which I wanted to use. For example, Panda, NumPy, Matplotlib, and Gaussian mixture model. Panda was for analyzing data. NumPy was for computation. Gaussian mixture model was for unsupervised machine learning. These packages were used to collect the data, analyze it, develop and backtest trading strategies. The peer reviewer of this paper recommended that well-known trading strategies should also be put in consideration, and this idea was implemented because a buy and hold trading strategy portfolio returns were used as a backtesting benchmarks for the study. Initial goal was achieved by discovering market condition where both versions of the triple moving average give some positive returns. For example, the triple exponential moving average only give return when the prices are moving from the frenzy zone to the sideways zone, whereas the simple moving average, the triple simple moving average trading strategy yields positive returns when the prices are moving from the sideways zone to the frenzy zone and from the frenzy zone to the sideways zone, whereby it's actually more profitable to use the simple moving average, the triple simple moving average, because it has several potential of making some money. As a result of this research work, I wanted to see whether I can improve the profitability of these two strategies. Therefore, I decided to cross over the short term, against the medium term and the long term moving average values. I discovered that when the short term, for example, the 20-day moving average is above the medium term 30-day moving average and the 50-day moving average, this is a buy signal, and it gave me various better profits. And also when the short term is closing below the medium and the long term, this is a sell signal, and also helped me save myself from losing money. This kind of approach, I named it free triple moving average, with this variation of the free triple simple and the free triple exponential moving average. This was the product out of this research, and I believe further research can be conducted in order to see whether it is a good way of making money. As a result of this research work, I learned that conducting research could lead to good outcomes that can benefit society. I worked as a single person in this research group or project, and I successfully contributed 100% with the aid from my supervisor, Professor Tiberu Sotaika. Discovering market conditions where both versions of the triple moving average could give positive returns was accomplished, and also discovering the new trading strategy called the free triple moving average was achieved. And this was really very interesting to see that I came up with something that can be used to make some money. I believe that studying on carrying out more research on this solution, the solutions derived from this work, is one thing that can move the work accomplished here to the next generation and beyond. Thank you, World Quant University, for giving me this opportunity, and I believe I have to continue doing more research, hence benefiting the society at large. Thanks very much for giving me this opportunity, World Quant University.